Morning all. Quite a few moves to look at. I'm sure this hasn't escaped your notice what's going on in sterling, in the Eurozone and Euro markets. DAX actually picking up just a little bit. Now, I don't actually have the CAC on here, but the CAC 40 or CAC 40, the French index, had been under significant pressure last week. I mean, we've got our election on the 4th of July, but if you recall last Sunday, was it? So a week and a day ago, President Macron called a snap election. And it does look a bit odd. I'll be very honest with you. I'm not altogether sure what his thinking was. I think he was hoping to forge some sort of alliance with one or two of the left-wing groups to thwart Marine Le Pen's Rassemblement National. Anyway, it doesn't seem to have worked, and I think it's really spooking the markets. It certainly spooked the euro. There's a euro, bit of a tumble Thursday, Friday last week. Still a little bit weaker as well, but the lowest level since early May. And also look at it against sterling. Yeah, sterling remains quite strong against the euro. Weakening a little bit, actually, to be fair. Anyway, let's have a look at what's gone on. So, as I said, French equities tumbled last week. I don't have the CAC 40. We've already had a question on here. Maybe I could put it up. Hang on. Indices. There we go. There's the CAC. Morning to you, Chris. Yeah, thank you. Gosh, I wish my wife would say the same. Good to hear your voice, Jerry. Thank you, Chris. That's the chart of the, well, it's called the FRA 40. It's the CAC 40. I think for legal reasons, it's not allowed to be called the CAC 40 because it's a derived price, but you can see what happened Friday. A huge sell-off, huge losses. So sharp losses last week, really, but it accelerated on Friday. And I think this time it was French banking stocks took a real big hit, and that actually dragged, I think that fall there alone on that Friday candle, that's 2.7% on the day, and actually on the week from when the election was called. So it's called on the Sunday, that's the Monday. So it literally tumbled from 79.94 close on the previous Friday all the way down to 74.86. That's over 6%. That is a big move. It is a big move. And I love looking at the stats, and you have to go back to March 2022 for such a significant move. But in fact, the ramifications didn't just stop there. When I talk about the ramifications, I'm talking about what investors are fretting over, and basically they're fretting over the possibility of a far right government might do. And it's possible, yeah. Marine Le Pen, I mean, way ahead of Macron centrist alliance, as it's called. But a far right government might really cause the same sort of effect as a trust-style debt crisis, but in France. And I think that's really what's worrying investors. They're worrying about more confrontation, more antagonism with Brussels, even the possibility of bringing up the topic of leaving the euro again. So and the EU. So these are all things that are destabilizing. They create uncertainty, and markets don't like uncertainty, or I should say investors don't like uncertainty. Anyway, as I said, it didn't just stop there, the effects in Europe, because the CAC 40, that affected other states within the Eurozone bloc, but also we had bond markets as well. And bond markets are not often talked about by investors, certainly not retail investors, but it's interesting just to see the spread between the German and French bond yields. And people use this as a measure of the stress between within the Eurozone bloc when one country's yield suddenly spikes higher versus the German yield. And the German yield is really regarded as the benchmark yield within Europe. So all other bond yields within the Eurozone bloc are measured against it. So if we look at bonds here, we can look at a government bond spread table. You don't need to subscribe to the FT. This is not something that's worth spending money on, at least not for this particular purpose, but I'm just showing you it here. And if we go down to France, the yield is plus 0.81%. That is widened significantly. France, I think that's the widest since 2017, but it should be around 50 basis points, something like that. And it's currently 81 basis points. So that's a sign of the stress in the whole system. You know, the fact that this far right government, possibly run by Marine Le Pen's RN or Rassemblement National, could see increased uncosted spending, more confrontation with Brussels, and actually just overall change in the direction, political direction of the Eurozone bloc. So there's a lot going on, and this has all been thrown into the mix last Sunday. So it's all, it's only been with us, 8 days. And I think the problem with President Macron is that I think he called the election hoping to forge an alliance with the left to thwart RN, but I think that looks less likely now, because I think it was on Thursday last week that the left wing forged its own alliances. And I think what that basically means for Macron's, he's basically got this centrist alliance that is in government, and that's in danger of being completely wiped out by Marine Le Pen's RN and the left-wing alliances. Anyway, the scale of the sell-off in French stocks, I think, will undermine markets in general, and it'll have an effect on UK stocks as well. And we've got our own election to contend with, as if that uncertainty wasn't enough. But other states within the Eurozone bloc as well, which are also sensitive to which party forms the next French government, and it's a government that could well be a bit more antagonistic towards the Eurozone and the EU. So really interesting. And it's something that, if I looked at sort of what I was expecting to happen in June, I'd have said, well, maybe possible sell-off, sell in May and go away. Do you think these US equities are going to carry on powering ahead? What about, the direction of interest rates in the US? And now this comes along. It's just weird. Very, very weird. Talking of which, US equities, yep, guess what? They powered ahead. S&P 500. Oh, gosh, what's happened? Oh, I've gone and opened it up on my other browser. Sorry. I'll open it here. I did this last week and it really confused my computer. So I think I'll stay opened on Chrome. It won't let me have two open. That's all I know. Anyway, so what was I looking at? S&P 500. There we go. Yeah, powering ahead. Yeah. What is it up? 86 points on the week. It closed here, 53.41. Huge, more huge moves. As I said, powered ahead, or at least the Magnificent Seven. I was just looking at the big stocks that had powered this move ahead more. And Apple, my brother-in-law who was out over the weekend, he invested, I don't know, not a ton of money, but quite a reasonable sum, tens of thousands in Apple back in the early noughties. He's made huge money. Absolutely, he just kept it all the way up. Scaled up seller. Anyway, Apple resumed its rise up, I think, just under 8% last week, and that's all down to news about the AI possibilities and also hardware developments, which I think really power the move. But Nvidia also, you remember that big chip stock company that manufactures chips that are being used in the AI industry, the AI business, and in huge demand. That was up another 9.5%. So both stocks are now in that $3 trillion bracket. It makes such weird feeling when I say 3 trillion. A lot of our markets, our combined stock markets here in the UK, are not worth 3 trillion. It's extraordinary. Yeah. Anyway, we had something else last week as well. We had the FOMC, if you remember, meeting. They are meeting their monthly meeting, although as we've discussed previously, they don't actually meet every month because there are only 8 meetings in the year. But they met last week and they gave us their projections. Obviously, they didn't raise interest rates. That was not what we were expecting. But they have this thing called the dot plot. Yeah, that's okay, Samantha. You go. That's fine. I do understand everyone's got time constraints, but they've got this dot plot at the FOMC. So all the committee members have to say where they think interest rates are going to be over the next, each quarter over the next 2 years. And it's interesting how that's moved. They kept interest rates unchanged as expected, but the committee, I think, surprised the market by saying now that they expected just one rate cut this year, which is likely in September. Let's just quickly go to it. I had it all opened up on the other browser, but as I'm in this one, I'm going to stay in this one. So here we go. So currently 5.25, 5.5. No chance of one in July. But if we go to September, that's when the rate cut's going to happen. At least there is a 65% probability of a rate cut. On this particular day, it moves every day, so don't worry, it's fluid. And by year end, the market, this is interesting, the market expects rates to be at 4.75 to 5, which would be another rate cut in December. So that contrasts with what the Fed is saying. The Fed is saying we only expect to cut rates once this year, but in fact, the markets, which are a lot more fluid and they'll be changing every day, they are implying a 2 rate cuts by year end. And so you say, well, who's right? Surely the Federal Reserve are right. Well, the Federal Reserve could also change their mind. But the difference between the Federal Reserve or the FOMC that sets rates and what you're looking at on the screen is that this is showing you what it's going to be every second of the day, and it changes constantly. Whereas we have to wait for the next time the Federal Reserve meet in at the end of July to tell us what their thinking is now. So it's entirely possible they can change their minds. Of course they can. So, and that's the reason why the market is decided to stick with 2 rate cuts, because that is exactly what it thinks it will be. Yeah. Someone's asked about UK equities. So there's the FTSE. Yeah, I think, we talked about uncertainty. We've got the uncertainty now of a French presidential election in France. We've also got our own election here on the 4th of July. And I think with the UK inflation data due out this week, the Bank of England MPC meeting, I think investors will be looking for some sort of guidance about the prospect for a rate cut in August. But truth be known, when you've got a change of government, so much else can change. So there's huge uncertainty hanging over the UK market, and that's the reason why it's spun off from those highs it achieved in mid-May. Not surprisingly, because we don't know what exactly the new Labour government to be will do exactly, although they've made it pretty clear in their manifesto, but there are still some things up in the air that they could change, and all that will become clear over the coming months. Yeah, well, yeah, I think there's still a possibility of a rate cut in August, but yeah, that's up to the committee. I think they're not going to do one this week because it would look odd to do it just before an election because it would look a little bit political. So I think that's the reason why they don't want to get involved in all that sort of stuff. Currencies, but we've already talked about the Eurozone and the French election woes. Certainly a lot weaker last week, the euro. I think this turmoil, is it turmoil? Maybe it was a bit like turmoil in the equity markets at the end of last week. Certainly the bond markets had that big sell-off, and that's caused a sell-off in the euro. And I think not only have you got that turmoil in the Eurozone because of the French situation. You've also got, the suggestion from the Federal Reserve that they're only going to cut rates once. And remember, if they don't cut rates as much as the market expects, that'll underpin the dollar. Hence the reason why you're seeing a weaker euro here. In fact, the euro, I think it fell to its lowest rate since early May. Yeah. Yeah, and against sterling, the euro, I think it fell at one stage. I know it's recovered now, but you got to go all the way back to August 22 to see sterling this strong against the euro. And I think someone was talking, was it Paul? I can't remember. Someone was talking about buying their euros ahead of their holiday. I just think generally you're getting a better rate this time than you were certainly last year. So there's no huge rush unless you're taking out huge amounts of money to do something, have some fun in some playground somewhere, I don't know, like Monaco or wherever. Anyway, yeah, August 22. Now I remember, that was just before the Truss debacle, wasn't it? Before Liz Truss became Prime Minister for that brief but catastrophic spell at number 10. Okay, let's have a look at the markets. Sorry, the calendar, I should say. We're looking at the markets. The week beginning the 17th might help. There we go. So we've already had out some data from China, pretty mixed sort of results, really, with a fall in industrial production offset by an increase in retail sales. I think the Chinese authorities will be rather pleased with an increase in retail sales because they've struggled with deflation. So inflation has been picking up, but I think to see retail sales picking up will cheer Beijing, I'm sure. Empire State Manufacturing, there's two big measures or three big measures of manufacturing and services data this week, but the Empire State is New York State, off to see the Italian mafia. Yeah. So Empire State Manufacturing expected, it's not recovered that much, but it's expected to improve from the previous month, but being below zero basically means it's not expanding. And that's really the manufacturing sector in the US and manufacturing sector in general following the inflationary crisis, because that really hit manufacturing a lot more than services. We then have the following morning, or very early morning, we've got the Reserve Bank of Australia's interest rate decision or policy meeting. Excuse me. No change expected there. Aussie dollar will be sensitive to that. Sorry, where was that? Aussie dollar will be sensitive to that. We then have retail sales in the US. Core retail sales expected plus 0.2%, same as the previous month. Minor impact, really, I think, unless, of course, it's particularly wide of the mark. So if it's a lot more or a lot less than what's predicted there. I should have actually highlighted the core retail sales. That's the one that we're looking at. Wednesday, that's the big one for us. CPI inflation data, so expected to fall from 2.3% to 2%, and that was always signaled by the Bank of England, and it's down to further cuts in energy costs, etc. Plus, because what actually happens with energy costs, of course, there's a lot of costs built into goods, mostly manufactured goods, but also services, with the cost of energy, logistics, etc. But actually, the FT noted that, in fact, there was negative price growth in goods the previous month. So that's one of the reasons why inflation is falling to 2%. And if it hits 2%, that's actually the Bank of England's target. Obviously, sterling and UK assets are going to be very sensitive to this inflation data, especially ahead of the MPC meeting on Thursday, the next day. But good to see, but one swallow doesn't make a summer. I think that's what Andrew Bailey should be saying, and I'm sure he probably will be saying that. We then have another policy meeting on Thursday before our own policy meeting. That's the Swiss National Bank, SNB, that's what that stands for. They're the central bank in Switzerland. Their monthly policy meeting, no change in rates expected in Switzerland. Any pairs that you've got with the Swiss franc CHF in it, just be careful, that will have an effect on it. And then here we go, the big one for us anyway. Monetary Policy Committee, or MPC as it's called, that's similar to the FOMC, the rate setting committee in the US. So despite the possibility of the bank hitting its 2% inflation target, as we've just been discussing, there is virtually no prospect, I should say little, because there's always a little prospect, a little chance. But I think it's highly, highly unlikely of any move in rates ahead of the election on July the 4th. As already suggested or implied, economic growth obviously has picked up here in the UK. We know about that. We had a lot better first quarter than expected. But with that comes a little bit of inflation in the system, especially noted by the Bank of England that service sector inflation is remaining stubbornly high. And I think the MPC, because of that and because of the election, are really unlikely to move on rates. But I think the big deal for the markets is what's going to happen in August. So everything is all about guidance. It's about what they're able to tell us. And I know there's no press conference, which is interesting. Anyway, we'll get it through their statement as to what the prospects are about a rate cut in August. Could be that Forest Factory are wrong, of course, and I'm not reading it properly, but I thought there was a press conference. Anyway, not that I can see there. Anyway, the debate is really about, is there going to be a rate cut in August? At one stage, they expected a rate cut in June this month. It ain't going to happen because of the election, because that was the surprise. We didn't know about that a few months ago. But what we do know now is that the service sector is performing stronger than expected, and inflationary pressures in that sector are not what the bank wants to see. And let's face it, even if inflation does fall to 2%, as I said, one swallow doesn't make a summer, and the bank will want to see how that develops over the next couple of months. It's likely, but not probable yet, that we'll have a rate cut. I'd say possible, not probable, that we have a rate cut in August. Obviously, sterling, UK assets, all very sensitive to it. Paul, are all the UK data is having no impact on the way people are intending to vote? Do you know, and that's the same in the States, Paul. You know, Biden and the Democrats just can't understand how they're not being credited with the performance, you know, with employment falling down, the number of new jobs they're creating, the way the stock market's performing, and yet he gets no credit for it. It's just one of those things. Maybe the electorate can see through it. They just think it's just down to policies enacted over the last several years. No, it's funny, isn't it? You know, I was listening to some Labour politician berating the Conservatives' performance since they came into power in, well, they had the coalition in 2010, 2016. But actually, a lot of the stats aren't that bad. We were regarded as a sick man in the G7, that we were going to have the worst performance. We're nothing like that. Yeah, it's sort of, yeah, I think everything is an anti-vote. You're quite right. But grass is always greener. Yeah. Well, it certainly isn't in Germany. It certainly is in Italy. And it's certainly not in Russia. Further sanctions imposed by the US have hit the ruble quite hard over the last few days. So, yeah, it's been a lot of turbulence this year. As I said, it's the year for democracy, or year for elections. Not always true democracies, of course, but yeah, there is quite a lot going on, big global macro events, as I call them. Anyway, let's just finish off the week. You can see on the screen here all the okay, we've got retail sales in the UK. That's almost after the horse has bolted. So we'll have already had the rate decision on Thursday. So whatever comes out, I doubt will have much effect on the markets at all, because that's now got to be priced into the August meeting. But we have got all of this data about services and manufacturing. So an economy is made up of two sectors, manufacturing and services. And this is the reading. We like to focus firstly on the Eurozone, sorry, where's the Euro? Okay, this is the official data for the Eurozone. So we don't look at the French and German ones for the Eurozone, we just look at the overall Eurozone ones. And you can see manufacturing ticking up a little bit, but it's still below 50, it's still not expanding. Services sector picking up, and that's in common with other areas as well, both in the UK, as you can see just below it here, and also in the US. So the flash manufacturing and services data here. Actually, services is falling in the US. I think we got a spike higher in services the previous month, but yeah, the US rowing its own boat a little bit, with manufacturing slipping a little bit and services slipping a little bit. Yeah, that's it. What time is it? 1:15. I better go. That's it. I hope it's been helpful. I hope you've learned a little bit. I was a little bit surprised about how, I mean, I had Thursday and Friday off last week, but I was really surprised how it got absolutely whacked, the Eurozone, especially the CAC on the bonds. But keep an eye on that one. That's a really interesting one. Let's hope inflation falls. Let's hope things look better for us for an August rate cut here in the UK. Anyway, all the best. Thanks very much. Have a good week for the rest of the week, and we'll catch up again next Monday at 8 o'clock.